Khan's View.
Welcome back and take a look at the agri-commodity prices now, which also have come off in the same sense as the crude and the metals and gold and silver as well. We have seen the crude oil prices decline between 8 to 10% in this week, and it has had impact on the ethanol prices, sugar, corn, many of these biofuel commodities. And in any case, with the Ukraine and Russia peace talks progressing well, at least those are the claims that are coming in initially, we have seen the wheat prices come off as well. So starting with sugar, we've seen the prices decline from those 3-month highs. Markets are watching at higher supplies coming in from India and Brazil as of now. We also are looking at 4-week lows as far as the corn prices go, the soybean prices go as well. For soybean, there are supply disruption fears easing from the Black Sea. That is what has taken the premium off those prices. Even the sunflower prices have come off the kind of highs that we started the month of March with. Corn is on your screens, and the production declines in South Africa and Argentina will continue to support the prices, but much of the excess speculative money also seems to be coming off this commodity. And then wheat should come on your screens, where we saw the prices hitting 14-year highs. This is also trading at a 4-week lows right now. And with the kind of decline that we've seen in the past 1 week, which has been to the tune of 4 to 6%, wheat prices actually have come back to the pre-war levels yet again. So much of the premium that we saw building in the last 20-25 days really seems to be coming off in many of these agri-commodities. We are now joined by former Agri Secretary Siraj Hussain to talk further about that. Mr. Hussain, hi, thank you for joining us. There have been various concerns because of adverse weather, because of fertilizers, because of supply disruption, sanctions on Russia and the Ukraine production concerns as well. And we did see the prices run up quite a bit on that, as has been the case with other asset classes, which seem to be easing now, and we seem to be looking at some normalcy returning. Do you see a similar case for the soft commodities?
I think the situation is still not very satisfactory. The talks may be going on between Russia and Ukraine, but I think the ports continue to be disrupted, the port operations. So as far as India is concerned, I expect some kind of cap on export of sugar. Now, it seems that the government will not allow the unlimited quantity of sugar to be exported. And I think about 8 million tons or 8.5 million tons sugar will be exported. And after that, there will be some kind of restriction. The reason is that our stock on 30th September are going to be lowest in the last 3 years. Now, as far as wheat is concerned, I think Indian exporters are taking advantage of the crisis in African countries, especially North Africa, some Arab countries. So we should be able to export a good quantity of wheat. But on the whole, I think we are still not out of woods.
Yeah, I get your point. Yes, there's a lot of uncertainty. My only short point was that some speculative money at least seems to be coming off, because we saw the prices shoot up in a very short time and they perhaps were overbought. So some profit taking is right now coming in. I take your point in about sugar, where we could be looking at cap at exports. Wheat is expected to see nearly 8 to 12 million tons of export. I mean, those are the numbers that are floating into the markets there. But, the same is the case with cotton, where we seem to be getting uncompetitive now in the international markets. My two-part question, Mr. Hussain, is one, are we going to continue to see these elevated commodity prices for a longer time to come? And two, as India is touted as a beneficiary for various commodities, starting right from rice to wheat to cotton to sugar, etc., how strong do you see that position as?
I think Indian agriculture still depends a lot on monsoon. And if our monsoon is again normal this year, we must remember that we have had 4 years of good monsoon. So this is going to be a 5th year. If our monsoon is normal and the cotton sowing is as good as we are expecting, then I think the cotton exporters will be able to use that opportunity. However, we have seen that after 4 years, every 4 or 5 years, there is shortage of rainfall, there is some failure of monsoon. So a lot depends on that. As far as wheat is concerned, we are in a comfortable position, and the government would be very happy that about 10 million tons of wheat may be exported. So for that, we need good facilities from railways for transportation at the port, etc. I think when the war ends, we will see some softening of prices, because then the quantity of wheat and about 14 million tons of wheat and 16 million tons of maize are frozen in Russia and Ukraine. So when slowly that quantity comes back, we will see softening of prices.
So what's your sense really? I mean, the market representatives tell us that if you look at the last 1 year, the prices are up anywhere between 30 to 70% for many of these commodities. From those highs, if you look at a week-on-week or a month-on-month basis, the prices have come off by 10 to 20% as well for some of these commodities. Are we continuing to trade at the elevated levels, whether it comes to edible oil or pulses for that matter, where the government, by the way, yet again has cut import duty, put it in free trade for a couple of those categories?
We can expect softening of prices if the war comes to a satisfactory end and if it does not expand further, because we do not know what is going on. Unfortunately, from time to time, we get very bad news, very dangerous news about use of, chemical weapons, nuclear weapons, etc. But having said that, I think as far as India is concerned, we are still in a very peculiar situation relating to chana, where the market prices are below MSP. So if monsoon is normal, then I think the pulses prices will soften. And if the war comes to an end, then in oilseeds also, in case of edible oil also, we can expect softening of prices.
Okay, all right. Manisha and as well as Mr. Hussain for joining in and taking us through that conversation. Well, for the markets, it's holding steady. We have the mid-cap index, which is up around 0.8%. We have the Bank Nifty, which is holding steady with a gain of around 1% as well. A lot of stocks buzzing around. So, for example, the future group stocks are higher at this point. Future Enterprises is up around 9% 6 rupee stock, but nonetheless, good volumes on that one. Future Lifestyle, which is up around 6% and Future Consumer, which is up around 4.5%. Again, not much in terms of price, but definitely in terms of volume. Separately, even a couple of these stocks from the entire mid-cap IT space seem to be buzzing around. So Mastech is up around 6%, Tata Elxsi too up around 5.8%. On that note, it's a wrap from all of us on Halftime Report. Stay tuned. Business Lunch up next.